Hey, it's Michael Saul, also known as Tiny, and this is the market video for the week of June 16th, 2014. First and foremost, I'm recording this 8:20 on Father's Day. So happy Father's Day to all the dads out there. And if you haven't called your dad today and wished him a happy Father's Day, if of course you can. My dad passed away, how long ago now? 2008. Wow. But if you have the opportunity, don't pass up the chance to wish him a happy Father's Day. So let's take a look at the market. Also, I've gotten a few requests. I don't know if it's the same person just requesting it under different names or not, but no, I have gotten a few requests from people that want me to go over gold and oil and some of the commodities like that. So I'm going to do that as well, not just the indexes, all right, going forward. So let's first and foremost take a look at the majors. And you can see here the S&P 500 has a bull flag. I still think we're going higher here. I do not think the upside is over yet. If we continue to pull back, we do have the 20 EMA here to watch. And then we also have this last high up here at 190.42. But the indexes look similar. I mean, the Dow took a little bit of a sharper pullback, but it's still orderly, and I really don't care if the Dow isn't leading, in case you've never heard me say that. The NASDAQ actually held up really well. It did have the down day on Tuesday for the week, like the rest of the markets, but it didn't really do that much damage. It still closed above all the moving averages, including the short-term 10-day, which is that purple line. The mid caps, they look fine too, also closed above the 10-day moving average. And look at the Russell here. The Russell, you could see, got the bounce off of it. So they came in with responsive buying off the 10-day moving average. I do not believe that this leg up is over until the Russell hits a new high at a minimum. That's what I believe right now. Okay, if things change, I will absolutely adjust. I am not going to sit here and be stubborn. Yes, the rally has gone on for quite some time. A lot of people are saying it's just too long and the cycle turns and all that. I'm with it. Okay, I'm with it. I get it. I understand the opinion. But for now, the trend is your friend. And right now, these look like, I mean, this isn't a great bull flag because it's not coming up at highs, but this was a nice sharp impulse up with a nice big expansion candle right in here. And this is a pullback. And to me, it looks like it's going to rotate and move higher. So I am looking for either weakness early on or a break of these patterns for potential buying opportunities here. Now, I believe I talked about LinkedIn on the last video. I'm sorry, I forgot. I do a couple of videos a week for various things, but I believe I talked about LinkedIn, or was it Twitter? I think it was Twitter. I think it was both, actually. But I think it was Twitter. Okay, so here's Twitter. I apologize. I mean, it's a little early for me. Usually I do these either at night or after a nice rest. But this morning I was up early. My boys came in and woke me up early. And then, of course, they wanted breakfast. So I said, all right, I'm up for the duration. Let's get going. So anyway, you can see Twitter broke out of this small base here. Now, it still has a way to go. All right, it has the gap fill here at 38.05. That's first and foremost. Then it has a lap fill at 38.75. And then, of course, it has the high up here at $40.77. This little nub high, I call it, right? This little reactive high. So those are all the resistance points here. I don't think Twitter is necessarily out of the woods yet, but I know I mentioned it, so I wanted to just update it. Here's LinkedIn also trying to get a bounce as well. Now, let's look at some futures / commodities. So here's bonds. Bonds has been pulling back, has been acting really well. So even though the market's been rising, I know a lot of people are like, well, when stocks go up, bonds go down. Yeah, that's not always the case. All right, that is not always the case as far as the correlation goes. Okay, sometimes bonds will rise with stocks, so don't get caught up in that as being the be-all end-all. Anyway, we've gotten a nice pullback off the highs here, and we have a small little W here. It hasn't yet triggered off, but it did get a nice reaction off of the 50-day moving average so far. but it's got to get going here and seeing if it can get up to the highs there. You can look at notes as well. These are the 10 years. Not acting as well, but holding the 50-day for now, so that's good. Let's look at lean hogs. Okay, lean hogs had a really nice move up February, March, and now it's just kind of meandering. Sometimes it's better to go to a weekly view when you see this. And if you look at the weekly view, you could see that it's coming out of a bull flag. So that's lean hogs. Let's look at live cattle with a big move last week. Cattle had a really nice move here. You saw it on the weekly chart, but it broke out of a base. Hold on one second. I'm going to show you why that Fibonacci. There it is. So you could see it was just meandering, not doing much, and then boom. All right, then it paused, and then it went higher once again. You can look at, this is sugar. Just kind of not really doing much. Here is coffee, which has been another nice shot up, and now it's just trying to form this choppy range. Had this reversal candle on Friday. That's coffee. Let's look at the grains. Wheat looks like it's reheaded down for the lows. Corn, same deal. Soybeans were holding up well. It had this whatever pattern here. I guess it was a flag. It pushed up. It did hit the high. Now it's kind of rolling over again. You got the 200-day moving average here. That would be a possible target if it were to continue to the downside here. There is a last chance for romance here on resistance up here at 1376 and a quarter, actually 1377 and a quarter. All right, so 1377 and a quarter, last chance for support romance. See if it holds. If it does, then could get a bounce there. Otherwise, it has the 200-day below it. Gold. Sloppy looking chart here. Hang on one second. Gold. Yeah, I still think gold looks lower. I mean, it broke down out of this nice coil here. It got to move. Now it's on the bounce. If it runs into resistance here at the 50 and the 200, watch for rotation down. Could this be a high or low? Yeah, it could. I know I have a lot of lines on this chart, and I could clean it up a little bit here, but to me, it still looks like gold will move out lower once this bounce fizzles out, but we'll see. For now, it's on the bounce. No reason to guess. Silver fell shy of the low. That's getting a bounce as well. And then finally, crude oil with a nice move. With a nice move last week. Now it is suggestive that it gets up to this 110.47. But remember, usually there's a move higher into the July 4th weekend, the July 4th holiday. It's not always on a weekend. The July 4th holiday, and then usually that is the peak for oil, or a little bit afterwards. You see here's the move into that time frame, right? Then it pulls back. Then it actually goes higher. You see here in August, and then finally it pours in. So a lot of people start watching, right? Let's just look at this here. So here's July 4th plus a couple of weeks, and it pulls back, and it goes up again into early September. What about here? Here's July, right into, this is actually the end of July, but it peaks out earlier. So a lot of times you'll see a peak into July 4th plus a week or two, and then from there you want to see how it acts, if it remains strong or if they do come in and sell it on a seasonal basis. All right, so the video was longer today. I'm not going to be doing a full look like I'm doing here. I didn't even look into the currencies because the video's getting long. I don't want to bore everybody. But if you like the extra stuff I'm doing, just let me know. If you'd like me to go into more stocks, or if you'd like me to look at currencies, then I'll be happy to do that as well. I just try to make these videos shorter, get to the point, and move on. All right, have a great trading week. If you need to contact me, tiny@stockmarkettrendsx.com, and I will talk to you in the next video or daily through the email.